Welcome back to the Malaysia Money Matters show. It's the 28th of November 25. We're doing our deep dive into the latest corporate earnings and some pretty big macro headlines. But our mission today is really to find the true operational pulse of these Malaysian companies, because so many of these Q3 reports, they're being totally obscured.
That's absolutely right. You cannot just read the headline net profit or loss this quarter. Not at all. The central challenge for you as an investor is to somehow distinguish the real operational health from figures that have been, skewed by one-off provisions, massive foreign exchange movements, or even these sudden geopolitical black swans.
Okay, let's unpack that. I think that's the key tension. But let's start with some of the biggest headline shockers. UEM Group is reportedly moving to take UEM Edgenta private.
Yep, and they're citing compressed valuations. I mean, it's trading at roughly half its net asset value.
So what's going on there?
Well, this action itself might be an opportunity for minority shareholders if there's a premium. But the key is why the valuation is so compressed. UEM Edgenta reported this huge net loss, about RM 94 million.
Right.
But the CEO called it a necessary structural reset. And if you look closer, that loss was almost entirely RM 96 million in non-cash impairments. It was, for all intents and purposes, a technical loss, not a sign of operational decay.
And this idea of masked performance, it shows up again with PPB Group, which sank into a net loss for the first time in, nearly a decade?
A decade, yes. That RM 200 million net loss was entirely down to one thing, a RM 290 million share of loss from their associate, Wilmar International.
Okay, so not their core business.
Not at all. It's related to a graft case in Indonesia. It's a textbook example of the risk you hold when large foreign associates hit some unavoidable one-off legal issue. Their core business didn't fail.
Right, but the overseas liability just wiped out their numbers. And even where we do see profit, we need to be careful. In tech, for instance, Inari Amertron's Q1 net profit doubled to RM 51.5 million. On the surface, that looks great.
It does, but that profit jump seems entirely technical too.
So we have to look behind the curtain again.
Precisely. The doubling was due to favorable foreign exchange movements. Specifically, the weaker ringgit massively boosted the value of their US dollar sales. Meanwhile, their actual revenue fell 16%.
16%, wow.
Yeah, due to lower loading volume and just soft semiconductor demand. So the forex tailwind masked some genuine softness in the core business.
So those are stories really defined by noise. Let's shift to the operational pulse. The banks, construction, they seem to be telling a different story of resilience. RHB Bank, for example.
A new record high net profit, RM 904 million. That's an 8.5% increase.
And that signals real strength, right?
It does. It was driven by sharply lower provisions for potential losses and just very prudent credit management. Even where there was a bit of a drag, like at Hong Leong Bank, where net profit was flat, the core loan growth was robust at 9.1%.
So the domestic engine is strong?
Very strong, even if global headwinds, like weaker income from their associate in China, affect the final profit figure.
And that domestic story really seems cemented by Malayan Cement. Kicked off their new financial year with a record quarterly profit up nearly 44%.
And the question there is sustainability. Is this real demand? And it seems to be. Demand is being fueled by huge forward-looking projects.
Yeah.
Data centers, the Johor Singapore Special Economic Zone. This is a robust long-term indicator.
Okay, let's pivot a bit to the bigger picture. The macro landscape, structural reforms. MITI's minister stated Malaysia has no plans to renegotiate its trade deal with the U.S.
Right, and this is a critical debate. What's so fascinating is the counter-argument from a World Bank economist. They urged Malaysia to reduce tariffs for all trading partners.
Why?
Because they warned that selective cuts, like the ones in the U.S. deal, risk distorting trade patterns and actually reducing overall economic welfare compared to a more open multilateral approach. So Malaysia is clearly balancing, bilateral political wins against broader economic efficiency.
And speaking of broader health, what about on the fiscal governance side? The MOF is drafting a new state-owned enterprise act.
This is a key structural reform. The goal is simple. Strengthen corporate governance and improve accountability among the GLCs. It's vital for the long-term fiscal health of the whole economy.
And finally, we have to touch on the persistent shadow of 1MDB. Malaysia still has RM 24.46 billion in outstanding liabilities. That's even after recovering over RM 31 billion.
That number, RM 24.46 billion, it just reminds you how deeply these long-tail financial scandals affect the national balance sheet. And those recovered funds are strictly used to service the existing debt. It means the recovery efforts have to continue full steam to settle this. So at the end of the day, the core tension remains. You've got the strong operational pulse in domestic sectors like banking and construction, but it's constantly being overshadowed by these dramatic, unpredictable elements. A forex surge here, a foreign legal liability there.
So here's a final thought for you to chew on. Given the World Bank's warning about trade distortion, how might Malaysia's increasing reliance on major bilateral trade agreements, like that U.S. pact, reshape its overall economic welfare over the next year? We hope this deep dive was useful for you today. Remember to subscribe to the Malaysian Money Matters podcast for more essential news and analysis.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.